I'm Alessandra Barrett, Senior Content Editor for JOC. I'm at TPM 2016 with Howard Finkel, Executive Vice President of Cosco. Thanks for joining me today, Howard.
Thank you for having me.
The Cosco China Shipping merger was just officially announced. What were some key decisions that went into making that merger?
Well, truthfully, it was announced and it will happen. But in America, there's some regulatory hurdles we have to go through before we really speak about this in detail. But I think today it's very important that carriers join together that have similar synergies to really form a stronger company where you can watch costs, where you can offer expanded service. So I think with us merging with China Shipping, very similar backgrounds, it's an easy thing to accomplish. But as I said, right now we're still waiting for some regulatory approvals from the United States. So I'd like to leave that question to a little later.
When we spoke last year, it was about the shortage of truckers and the need to have something that influences rates beyond just supply and demand. How's that looking for this year?
This is going to be a very, very difficult year for the carriers. Unfortunately, the rates are probably right now at extremely non-compensatory levels. The spot market rates have gone crazy from Asia to the United States, and unfortunately, the spot markets, which usually last maybe a month, now have been lasting 2-3 months. So we're going into a contract season with fairly low spot rates, which is dangerous. I really think that shippers really have to realize that you can't continue and grow a business with non-compensatory levels. So we're going to try to just negotiate as sharp as possible so the shippers get what they need and we get what we need this year. The trucking situation has not gotten that much better. It's gotten a little bit better, but I still think that the carriers really have to talk to the shippers and possibly put something in the contracts that would trigger increases when the truckers actually increase their rates, because we've had the situations where we negotiate contracts for 1 year and maybe the trucking rates increase every month. You can start out with a $200 trucking rate. At the end of the contract, it will be $1,000, and that could be very, very dangerous.
From your perspective, what's the biggest change to business operations that came out of what happened in the West Coast at the ports last year?
Hopefully the biggest change will be communications will get better between shippers and carriers, between the union and the carriers. I think we really have to be mindful that we don't stop trade in any way. So I think usually, the labor contracts are multi-year, but I think we have to be constantly talking to make sure we're on the same page and make sure that trade continues without any interruptions. So I'm hoping that the message we all get is we have to continue talking and not just say, okay, negotiations are over. We can wait till the contract ends and start talking again. We have to be constantly talking.
Well, thanks again, Howard.
Thank you very much.
I've been speaking with Howard Finkel, Executive Vice President of Cosco.